Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be with you again.
Hilliard, Canadian real estate, is it on the way back now that there's kind of a partial reopening?
You know, there was a huge surge in the number of sales in May from April, but there was a huge decline in the number of sales from May 2019 to May 2020. So there have been some sales. I think there's certainly a lot of people that are very impatient who haven't been able to buy anything for 3 or 4 months because of the restrictions, and now they're out there. But I don't think it's not going back to the way it was, and certainly the trend was already in place for some time, perhaps 3 or 4 years actually, to a weaker market. So this is probably not likely to be the full recovery back to normal again. It's probably never going back to what it was in those halcyon days.
Is there a supply glut? Are there more people trying to sell, or are people still trying to get the prices they were getting 2 or 3 years ago?
Well, if you look at the Vancouver, it's interesting. One of my frustrations is the real estate boards like the CREA and the Toronto Real Estate Board and the Vancouver Real Estate Board. They put out a lot of data, but it's very difficult to assess some of it, and it's not intuitive, and they hold back some really interesting information. But individual realtors have access to that. So on Twitter, there's a number of the individual realtors that put it out, and there's some, you've interviewed some of them on, like Steve Saretsky on your show, and in Vancouver, they showed a big uptick in sales in May. But the number of listings went up much, much faster. So there's a huge number of listings now, much higher than May a year ago. So I think people are starting to feel the pressure. One of the things is the Airbnb issue. A lot of the people that bought for investment purposes, hoping to rent out rooms on a night-by-night basis, now are stuck. And that's one of the things we expect to see lead the market lower is I call them involuntary landlords. People got stuck with units that they were maybe hoping to live in or to flip, and then they end up having to rent them out. There's just hundreds of thousands, maybe even millions of units like that in Canada. And so it's a second or third property for these people. And they're really under the gun. They can't just sit on it because the fees are ticking, the interest on the mortgage is ticking, everything's going against them. So if they decide to all sell at the same time, it's going to cause now I don't know if the listing prices are realistic yet, but if they all try to sell, even if they lower the prices, it'll be difficult. But if they all try to rent the units out, then we'll get a further continuation of the trend, which is rental rates are coming down pretty rapidly in Toronto and Vancouver. So there is, to answer your question more directly, yes, there is developing a glut. I think both in places for sales out of some urgency and also places for rent.
Should people looking to buy real estate hold off with hope perhaps prices will come down further?
I think so. I mean, the shortest duration of one of these housing crashes, if I can call it that I'm aware of is 4 years, and that was actually the U.S. From 2006 to 2010. And we're much closer to the 2006 equivalent than we are to the 2010 version, because the average decline in prices in the last 10 bear markets in housing was 36%. And the U.S. one was 40%, and some of the other ones were a little bit higher than that. The mildest one of the 10 was in Canada, and it was the last one in Canada, and it was from 1990 to 1995, so it lasted 5 years, and it was only 25%. So, but this one's going to be bigger than that, because the bubble is much bigger, and the prices are much higher in relation to income. So, you can expect at least the average was just 36%. But I think one of the reasons you're seeing some activity, a burst in activity, is a lot of people are being fooled by noticing that prices have come down 10% or 15%, and they're watching the market really closely. And they feel, oh, if I don't get in now, I won't be able to get in. And that's understandable, because in the stock market and in other recent declines, because their memory doesn't go back to 1990, the opportunities passes pretty quickly. If you don't move quickly, and after a decline, then it goes right back up again. But that's not going to happen this time, in my opinion. I think you can wait and be rewarded for waiting, because if the $1 million property is going down 10% a year for 4 years, that's $100,000 a year you're saving for waiting, and that's money that is really hard to save up. So waiting 4 years, staying in a rental for 4 years, buying 40% lower 4 years from now, it's a wonderful thing to do.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, British Columbia is partially reopening, but there's still social distancing in restaurants and pubs. They've put up plexiglass barriers at bars, so no more than two patrons who know each other can sit together. The patios are well spaced out again. What's the return to so-called semi-normal in Alberta like?
Well, Alberta was kind of a tale of two stories, because Edmonton was doing really well on the number of cases, and Calgary had a much worse experience. And the Premier of Alberta has been pushing pretty hard to reopen the economy, because he's worried about the economy staying shut for too long. So there's been a rapid move to reopening golf courses and reopening restaurants and patios and all that. And I'm a little worried, looking at the pace of, it's hard to tell, what's going on inside closed doors, but, in restaurants, you look at the people in the restaurants, and I don't see the social distancing or the physical distancing, I guess we should call it, that was talked about before, the 2 meter distance. So I don't know if we're rushing here too fast or not. I'm watching quite closely a new outbreak in China, and huge increases or rapid increases in cases in states like Texas and Florida, and even places like Oregon, which seems really weird, given that everybody's outside in Oregon and there's no need to be stuck in a small environment with a large number of people. But whatever's going on, it's not over yet. I mentioned before, probably some of the reading I'm doing about this, going back to the Ebola virus and the AIDS virus and other things like that with experts that were involved in them. And this book I'm reading by Laurie Garrett is extremely interesting and thorough and comprehensive. And some of the people that she mentions in the book, going back to Ebola and AIDS, one of them especially, a Belgian doctor, Peter Piot, P-I-O-T, has come out recently when he's asked about COVID-19. And he said that there's no return to normal until there's a vaccine found. And he says that people should be realistic about not expecting a vaccine to be found easily and quickly. It'll take time. Laurie Garrett herself, the author of the book, predicts at least 36 months. So, unfortunately, it seems like we're going to go through a kind of a roller coaster ride here, where we get optimistic because things are going well, and then we'll get pessimistic because there's a setback, and it'll go on. Now, on the positive side, the number of people looking for a vaccine and the amount of money being spent is unprecedented. Like, they never got approval for Ebola because it was just mostly in Africa, and they never got approval for money for research on AIDS because it was deemed as a disease of homosexuals, and Ronald Reagan was in the White House at that time, and he didn't even want anybody to talk about AIDS. So now this time, everybody agrees that it's good to spend money on this. There's almost 100 different projects. There's 10 potential vaccines going into human trials this summer. So that all sounds much better than what happened in the previous searches for vaccines. However, it still is very hard to find a vaccine for this type of virus, is what I'm finding in reading. So fingers crossed, but I think it's important to not be too optimistic and not to get expectations too high, as some of the leaders have done, when they're talking about we'll have something by September or by the end of the year at the latest, kind of thing. So that doesn't match up with some of the very experienced people like Dr. Pio, who says it makes it sound like a much more difficult task.
We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, U.S. retail sales actually hit a record high as their emergency relief checks hit bank accounts and people rushed out, I guess, to use them. Is that going to be kind of a false flag here, where it's a one-time shot for the U.S. and things could fall apart again very quickly after that?
Well, it's interesting that the people got a $1,200 check. In Canada, we have a different system, and the money got out much faster, and it was $2,000 a month. But in the U.S., they tended to get more of a lump sum, and then there's unemployment insurance in the U.S. as well. But I don't think there's anything quite like the CERB that Canada has. But it's quite possible that people just went out and spent the money when they got it. People are exhibiting some very unusual behavior. For instance, there's a stock market thing happening which is absolutely shocking to me, and that is companies that are basically in bankruptcy, like Hertz. People are speculating on the value of the stock, which had gotten obviously way down. They're normally in bankruptcy, virtually 100% of the time in bankruptcy. There's so much debt in the company, that's why they go bankrupt, that the common shareholders, the people that have the profits, if there's any left over after the debts are repaid, they get nothing, because the debts are, the debt holders are lucky to get 50 cents on the dollar. So there's not likely to be anything left over for the equity shareholders. And yet in this case, people are speculating on these shares as if they had some value. Somebody just this morning, I saw an index of all of the companies that have very high risk for insolvency, as measured by credit default swaps, which were talked about in that famous movie about the financial crisis, global financial crisis. And the credit default swaps are indicating a very high risk of bankruptcy for the companies. And if you take this group, and somebody called it the garbage basket, it's outperformed all the other stocks by a huge margin. Like, it's just unbelievable. Like, the stocks have tripled in the last fairly short period. So the garbage is doing really well, and even the good stuff, the S&P 500, is only 3% below its record high, which was hit in February. So it's a very unusual, because when you look at things like industrial production, for example, we are back to the levels that were hit in 2009, which was, everybody remembers, was 11 years ago, but it was also a global financial crisis. And things were really depressed. Like, that was it's not as severe as this recession. This recession is going to be more severe, but up until this one, it was the most severe recession for 80 years, kind of thing. So for the stock market to be basically almost 5 times higher than it was in 2009, and yet industrial production is the same as it was in 2009, shows how disconnected investors have become from reality.
What's happening with oil? Is it recovering enough to give Alberta a boost?
I think there's some good news in there, but the overall the general sense is it's not very good news. So the good news is the price of the Western Canada Select has come back up to where it's a fairly narrow discount of about $10 from the WTI. And I think the reason for that is because some space has opened up in some of the pipelines, because you'll remember the cost of transportation in a pipeline is only $5 a barrel, but on rail cars it's $15 a barrel. So at these prices, there's no room for $15 a barrel. That just doesn't work. So people didn't know what to do. The product was building up, and there was a huge crisis looming. And then some space opened up, and people are now able to sell it sort of like in the $30, $35 a barrel range, and then still get people to add that $5 transport fee and still be able to sell it. But in the overall, it still looks pretty tough, because demand is down quite a bit, and supply had been increasing for several years. So Alberta's kind of at the end of the supply chain. We're further away from Tidewater and further away from the market than practically any other major exporter in the world. And so if there's a glut in the Gulf of Mexico, or if there's a glut in the Arab Persian Gulf, or if there's a glut in New York, then we're in trouble. So it temporarily looks pretty good, but unless we get a full recovery in the economy, which I'm not expecting, it's still going to be tough for quite a while to come.
Overall, what's your picture? How long is it going to take Canada to be at least semi-productive? In general, or in the oil and gas? Well, in general, what's your outlook for Canada for the rest of the year?
Well, there's two sectors in the stock market that I watch really closely. The one we just talked about, energy, and the other one is financials. And financials are struggling because they've got this huge mortgage deferral cliff looming in September, when the 6-month deferral on all the mortgages, and for sure some of those people are not going to be able to pay their mortgage in September. So the deferrals, which are now not being counted as defaults, will become defaults unless there's an extension of the deferral. And the energy sector, as we just discussed, is the outlook is poor. So Canada's in for a tough time. There's just no question about it. I think we got a few bright spots like Shopify in Ottawa, which is doing phenomenally well. It's kind of like a mini version of Amazon, and a few other things going on. But and one of the really bright spots is the gold sector and the silver sector doing phenomenally well. And Canada has more than its share of companies in that category. Although a lot of the mines are not in Canada, but the companies, a lot of them are domiciled in Canada. Vancouver used to be the hotbed of mining speculation. And so that's making a comeback now. And so that's good for some of that. But in general, the main drivers of the economy, or energy and real estate, are in a downtrend that's going to last at least a couple more years, if not longer. So Canada's in for a tough time. We'll just have to find a new version of Canada to reinvent ourselves. And I'm optimistic we will, but it's not like you just, sort of jump over all the bad stuff in between and land on the other shore, all ready to go. You have to go through the valley, and that's unfortunately what we're going to have to do.
Hilliard, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. Hilliard, where can people find that book?
Well, it's available on all of the Amazon.com, Amazon.ca. If the bookstores are open, I think most of them are still closed, but Chapters and Indigo and all that stuff as well. So both in Kindle and in paperback version. And so I encourage people to let me know if they do get a chance to look at it, if they like the book.
And, of course, they can track you down if they go to your website, macbethgroup.com.
Yeah, and the Twitter feed, HMACBE, there's an awful lot of content produced there. The main original content comes out Friday, and I call it the Weekend Note, and we cover these topics in a written form, some other topics that people tell me they find very interesting. So I encourage people to sign up for that. It's free, and one of the best ways to find it probably is just to go on Twitter, look for it coming out on a Friday, and then click on the link that takes you to the website, and then you can sign up there.
Hilliard, thank you again.
Thanks, Jim.
Hilliard's website again, macbethgroup.com. Our YouTube channel is Talk Digital Network. Questions for our guests like Hilliard can be sent to info@howstreet.com. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.